All right. So good morning, good afternoon, good evening. It is Tuesday the 30th. We're waiting for JOLTS numbers, U.S. consumer confidence numbers, and all that good stuff. We are well aware it's a U.S. based economy is all around services, right? So it's a service-based economy. And we have to be cautious of that one particular number there, right? So you notice I've removed all of my trades. I have nothing open. And I'm just going to sit and wait for the news to come. And then we'll be able to trade the reaction accordingly. All right, so let me just remove this. All right, looking at the daily candle, we've made a slightly higher high. We do have a slightly higher low. It is bullish compared to yesterday. We would expect somewhat of a bullish bias to the direction, right? But this news might reset this bias, and it may allow us to get into this bullishness from a much lower price.
1 minute before the release, stand by.
And as such, I'm thinking we might be able to buy below the low here in order to finish the day somewhat higher, right? So when we're looking at the overall move, it is in the neighborhood of, 50 some odd pips, 43, and we would expect 60, right? But anything can happen. We know we're missing some. And so we're adding either to the top or we're adding to the bottom. Either case, we have to cover that range, right? So let's go take a look at that on an hourly, right? We've highlighted the ceiling really quickly. Let's highlight the floor very quickly.
10 seconds before the release, stand by.
Switch to 5 minutes and watch the reaction. Right, so personally, I want to be buying from lower. There we go. Right, so I'm closing shorts here, and I want to be buying down here. Right, let it bounce around for a few minutes. Let it do its thing. Right, we don't fight the U.S. economy. We don't fight the U.S. consumer. Right, and so this is the reaction to the news. The news must have been good for the U.S. Right? Without even looking at the number, you can see from the reaction. Overall, we do want to buy, right? But not when it's in the middle of the range like this. Let this one candle at least settle down so you have an idea of where it closes. We still have 8 seconds there. Sorry, I'm on my other platform over here. I'm gonna start clicking away while this one candle settles down. Oh, this one over here, cancel all. Right, so remember the news just came out, right? So the market was buying the rumor. We sold on the news. The market is already looking forward to the next news event, right? We're thinking about tomorrow. We're thinking about, between now and tomorrow. And so an excuse to buy would be right here, right? We're at that previous area of support here. So I'll start one. And then I'll copy this box. Sorry, I want to copy this box and put it right there. I'm playing in this box here. And so as such, this is my box number one. I just made money in it, right? And here's another chance to repeat the same trade, right? I'm a buyer. I just have to be picky where my entries are, right? Preferably my entries will be lining up with previous areas of support. Right? This right now, boom. Right? It's just one little click. And if I'm right, it retraces into my target. Oh, come on, come on, come on, come on, come on. Boom, just like so. Right? So accuracy is the sniper accuracy. It comes down to the level that I pick. Right? The box just puts me in the right neighborhood. right? So here I'm buying in on my other platforms as well. Just give me 1 second. I really want to buy red over here on the C Trader platform. And so I'm just gonna slow down a few seconds here. Wait to see a red candle that we can purchase. Right, so we've already come out of the box. Now we're in this new box right here. We're in this zone here. If I reset from the low and I reset this on this current break, I would expect the price to remain in this current standard deviation and maybe find its way into this upper half. Right? Consider this a Bollinger Band, and this right now is the center of the band. Right? So we want to be buying when things are cheap, not when things are at the top of a green candle. Right? But at the bottom, like this, would be a good place to buy. Right? We're not buying random. We're not clicking away our inventory. We're just spending it one click at a time. Right? We anticipate drawdown, and we use that drawdown to make money. Right? We're exploiting drawdown. All right. So as a result of the news, we're down to support. We want to be buying in this area here in order to be, sellers later on from a higher price. Considering what's on the calendar, the main event is really tomorrow, right? And going into Thursday and so on. So today was like a precursor, jolts and confidence numbers and stuff, right? So buy red. Oop, I missed it. Right, so if we drop a little bit, I want to buy in here. If we drop another box or two, I want to buy that also. Right, I am bullish on the day, and therefore I have to be buying when things are supported. Right, I'm not trying to be bouncing to the moon. I'm just trying to be bouncing 3 pips into my target. Right around here is a good place to expect a bounce. I'm looking at this level here. If we go further, we know we bounced here before. Right, so we can anticipate a retest and maybe take a trade there also. Right, that would be my trade number 4 in box number 1. Right? I labeled box number 1 where my first trades are. Right, this is where I start counting drawdown. Right, the overall move so far has been about 2 boxes off the high, 3 boxes off the high, 2.5. So if we're using this box as a measuring device, from that high up here, the market has fallen 1, 2, 2 3/4. If we reset the boxes on that low down here and now expect to move back up, we're inside of one box as we speak. Until we break out of this box, we are contained to one standard deviation, and we would expect to keep making 3 pips, 3 pips, 3 pips. Right, so every time we revisit the bottom here, I want to take a buy. Right, every time it gives me a cheap entry, like a red candle, like so. Right, all I'm doing is spreading the money that belongs in this environment. Right, it's allocated for this box. All 4 clicks are meant to be here. Right, if I'm right with my assessment and things go up, I will be closing all of these trades, which allows me to recycle all of them. I'm looking for a bullish outcome on the day. Right, so if we go and now that the news has kind of settled down a little bit, let's go back and double check the daily chart. right? This is what we walked into earlier, slightly higher high, slightly higher low, bullish candle. We've survived the retracement, and now we want to continue with this bullish bias, right? We're not thinking the moon, but we're thinking at least up for the next hour or so, right? If we look at this on an hourly, this is where our floor was. This is where the ceiling was. And as we speak, we are contained within this measure bar, right? So we have to break out of this measure bar. And with this higher highs, higher lows, it all makes sense that, our probabilities line up to the upside, right? So I want to be buying when things are supported around here, right? Because I expect over time, we will be testing the ceiling and maybe completing the missing ADR, average daily range. Maybe we're going to add it to the top. Okay, so now when we look at this on an intraday or microscopic scale, in this environment here, we can start to draw the ladder, right? And then with the ladder, you now have a call to action, you have a point of reference, you have something to lean into and make a decision, right? And then by leaning into, it's just a matter of stick to itness, right? If you tell yourself you're a bear above the line, or sorry, you're a bear below the line, and you get to the line, you have to commit. You can't just all of a sudden wimp out and become something else. So, right, these call to actions, it's a place where you have to ask yourself, what do you want to do here? Do you want to short this and take it back to this previous level? Or do you want to take a long here? Right? So it's this repetition over and over and over. And the ladder is just that. It's a ladder and it allows you to repeat the same question over. Okay, so here we go. We just want to be supported while we keep buying the same size with the same target, with the same stop loss. Everything's the same. We don't change much of anything. We're just looking for bullishness overall. And it's a precursor to the main event on the calendar, right? When we're looking at the calendar, let's bring that into view. Right, so we just had the jolts and all that good stuff right here. Right, so when we're looking at tomorrow, we have German numbers, you have employment numbers, you have the Fed rate decision, right? And then on Thursday, we have more important US data dumps, right? Tons and tons and tons and tons of numbers on Thursday. Right, so it's only speeding up from here. And as far as the news itself, whether it's rated, yellow, red, or green, that's just based on previous news events and the market's reaction, right? So the news itself could come out way off beat and the market reacts accordingly, and it doesn't align with what the calendar expects. The calendar says it should be a yellow news and it comes out, it's a blazing red. Right? We don't care. We just care that the fact it's scheduled, right? The fact that it's on the calendar is enough to warrant risk management, right? Unless your plan is to profit from that news event, then the volatility that's expected is something you might be targeting. Otherwise, it's something you're trying to avoid, right? Because it's based in the unknown. We just don't know what the outcome of that news is until it's delivered or presented. So stay away. Trade the reaction like we did here. Okay. At the time of the news event, if the news had been horribly bad for the US, the euro would be trading up here right now. Right? So ideally, you avoid the news, the market reacts to the facts, and you and I step up to the plate and trade those facts. Right, so right here, red candle, bottom of the box, good place to buy. And if you can afford it, maybe put two, right? It's the bottom of the box. The probability of the bounce are extremely high here, right? If it breaks, it also defines where it's going. That's one more standard deviation in our line of sight. And we would expect this because it did not spend the time in the box, right? So it's the exchange of time for money instead, right? So if we're staying in this box, if we're bouncing in this, then we're keeping true to the standard deviation. See how we just broke down here, leaving all of this unused time, right? So that's is a signal. It's a clue that there might be another 9 pips coming, another full box on its way. Right. So now that we spent money up here that was allocated for that particular box, you're now allowed to spend money that's allocated in this box. But you have to have a reason to click, right? So you're now looking to your left, looking for support of some kind to buy, expecting a bounce, right? So in this area here would be a good place to place a buy, right around there. Boom. Right. We want to be buyers when things are cheap. Right? We are opportunists. Ideally, what we've just done is built a small bullish position in a bullish pullback. Right. And we're doing it on the way to the bottom of the hour. And that's usually when we start to get paid for this work. Right. So a lot of what we're doing is it's not a coincidence, right? It's happening on schedule. And when people assume things are random, we actually find consistency, right? We filter that randomness into something that we can yield consistent pips from. All right. So let's keep buying when it's expected to bounce. And then in 30 minutes or so, I would expect, that will be away from this low and maybe pushing higher. It's anything can happen at any time. And the best part is for the calendar events, we have the calendar year in advance. Right. So when that volatility, red event, yellow event is scheduled. We just don't know what the actual reaction will be. So we step aside. Right. But knowing ahead of time is a huge, huge, huge benefit. Right. Here's a place to buy right now. Boom. Right. And I'm putting the clicks that belong in this box, and I want to buy all the way down to 825. Right. I have orders to buy all the way down there on my other platform. Right. So I'm at 6, so I'm saving 2 for the bottom half of the box. Right. So I put 4 in the upper box. I'm allowed 4 in this middle box. And I'm just waiting to see the opportunities. It should bounce around here. finally. There's the 825 level that I'm looking for, right around there. So let's repeat this. Let's recycle. All right. Who doesn't love how to trade stick shift? Everybody's trying to trade to learn. Everybody's trying to learn how to trade automatic. And here we are trading stick shift. I love it. Nice and easy. Beauty. Why make money with artificial intelligence when you can make money with natural stupidity? So if we can have an opportunity to repeat here, like so. I'm just recycling the money that's allocated for this job. And so it's not like I'm over risking or over trading or overspending. As long as the trades are closed, I can reopen them. Ooh, I put too much sugar in this one. Come on, come on. 30 minutes or so, and we'll have completed a good day's work. All right, just to go check up on things real quickly. We're still moving in the right direction. Daily, this was yesterday. We'll see what today looks like tomorrow. This is the average, right? So this is what average Mondays look like, average Tuesdays, average Wednesdays, Thursdays, Fridays. And then when we go and look overall, we're almost at the 9,000 mark for pips. I think we're doing well. Stopping trading every day plays a big role in our consistency. Right? It allows us to hold on to our profits, even though you may think it's capping your returns, it's actually minimizing your losses, right? It's stopping you from over trading. And so you get to earn and keep what you earn. Right? It comes down to discipline. There we are. Everything's behaving according to plan. Right? We're willing participants down here. And we know even if it drops another box, I want to play in this. Right? I don't give up on my bullish bias just because we've made an outside range. Right? The outside range is not uncommon. That's how they get under your skin, right? That's how they get you to think that you're wrong by tripping up your stop loss. Right? They have us thinking, oh, we're going the wrong way, when in reality, nothing's really changed. Right? So outside ranges, trader's worst enemy, and they happen on every time frame. Right? That's the thing that playing a breakout will have you falling for this trap over and over and over. If you play bounces, you get to survive this kind of trap. Right, so here's a place to buy, and we're not buying random. We're buying because we found some kind of support here. We're testing, right? It's an assumption. So our assumptions are tested. We're trying to test as cheap as possible. And if we are correct with our assumption, we make about 46 cents or so. Right? It's a cheap way of approaching risk. Right? I want to do it bite size. This box is off. This box is the wrong size. This is better. Okay, so there we are. Right, we tested that support area. And if our assumption is correct, if support is in this zone here, if we are in the right place to find that support we expect to find, we will get paid for this assumption, right? If our assumption is wrong or flawed or low probability or whatever, we end up in this other box, and this allows us to fix this first box, right? It's a repair mechanism. It's a repair process. It's not trying to make $1 million. I want to buy this if I see a red candle here. And all we're doing is playing, oh, I missed it, playing the probabilities. Right? If we can get above somewhere the 860 mark, back towards the ceiling and or around this previous area up here, anything beyond today's ceiling and the top of the range, oops, right around there. That should be, oops, that should be about 4 boxes. It's 3 boxes. And so we probably would want to be sellers up here. Right? So if we could get up to the top here, allow yourself 4 boxes of sells to eventually catch this top there and make your money on the way back. Right? We postpone gratification. Right? We're going to sell when everybody else is buying. Right? Because they're thinking it's going to the moon and we're thinking it's going to go to resistance. Okay, it may even not even get that far. Right, so we understand that's a measured move. This is not a random amount. These are just our boxes stacked. We just have to figure out how many boxes will it require and how am I going to spend my money in those boxes. Here I am buying. I just put 2 there. I'll put 3 and 4. I'm putting all 4 that belong in that box in that box. Okay, so now I'm allowing myself to go into drawdown, right? If we get here. Right, so if we get into this bottom box, I'll be in drawdown with my 6 open trades. But I'm also allowed to open more, which the balance of, the aggregate of all my trades will give me a break even, which I control. Right? I'm controlling where that break even is by choosing where and when I open further trades or close existing trades, right? That's important. Close the losers. Don't have to close them all. No, close 1 or 2, right? Close your biggest problems, not your cheapest ones, your worst ones. Right, so here we are. It looks like we tested support. We may have found it. Right at the bottom of the hour, in line for my, in today's case, bullish pullback. Right, so bullish market. I'm in midst of a pullback and I'm buying this. Have we had a losing day yet this year? don't think so. We have had losses along the way, but I don't think we've had a negative day. Right. So that's the psychology that we're trying to keep up with, right? By leaving the casino every day, feeling like a winner because you did win, you come back the next day feeling like a winner. Instead of coming back tomorrow beat up and scarred, you're coming back willing to repeat the 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 success, you know. And it's this attitude that keeps you moving forward. We do take beatings, but we present the other cheek, right? This is the process speaking for itself, right? I'm not going to fight a good thing, even if a good thing sometimes delivers losses. I'm not going to fight it. I'm just going to roll with the punches. So here we are expecting a break up into the upper box, and I can't buy a breakout. I'm not a breakout trader, but I do want to buy some kind of a retracement, some kind of a red candle, some kind of rejection. You know, I'm not giving up on my bias. I just want to buy it cheap. Oh, here's the break. Here's us closing more trades. Right, outside range. That's a few of them that we've had now, uh, just this week. And get used to them. They're everywhere. And if you're ill prepared or oversized, those outside ranges will destroy you. I'm waiting to see a reason to buy. Oh, there it is. I just put two. I had one already. I'm wanting to see if I'm able to put a fourth. There's the fourth. It was a second late. So now I'm back in the box. One. If it goes deeper, I'll allow me a couple more. It will allow me a couple more. I'm trying to spend my money as the possibilities are presented, right? I have to weigh the probability of it bouncing in my favor. I just don't want to be clicking at random on random candles. I have to see support. I have to see a reason why the price might want to bounce here, like right now, right? Because I'm looking at this right here. Right. So now that we've rotated, you know, we've done this portion right here. It's all about these lows holding, right? If the lows hold, we're going up. And as such, we have to start breaking the previous highs. And that's the problem with trying to get to the moon. There's a lot of resistance between here and the moon. Red candle. I have one click left, but I missed it. Oh, well. It's okay. I'm making money instead of spending it. There it is. I get to recycle. 7. I put them all in. So between the two boxes right here, I've put all 8 clicks. You know, if I was sure, or if I had a really high probability in my mind that, hey, over the course of time, we are going up here, I could, if I wanted to, remove the target 1 maybe 2, maybe 3, maybe 4, maybe 5, 6, 7, 8. Right? I removed the target on all 8 of those trades, right? So these are now undetermined endings, right? I'm going to choose when and how these trades close. So imagine myself starting in box number 1. Now I have a bunch of swing trades, 9 pips off the bottom. I expect average moves to be 3 to 4 boxes. There's 3. An average move might take me up to here, right? So those swing trades that I just created for myself, well, I commit to closing them somewhere in this area, right? Why this area? Because by then I would expect some kind of a retracement, right? And then I don't want to give back the money that I made on the way up, right? Because this is undetermined, right? This could take you back to here, right? So it's just me looking forward, one standard move, one standard swing. And I anticipate, because I'm here, for another hour and a half to 2 hours trading with other people, I'll be managing these trades by myself manually, right? There is a stop loss, and that stop loss is 4 boxes away from the entry. And so I'm kind of affording myself the opportunity to make 4 boxes of money, right? That's kind of what the idea is, right? You're trying to set it up so that you get somewhere near 1-to-1, right? 0.875. That would be a 5-box move from the very, very, very bottom, right? So that's the kind of stuff I'm thinking about. My mind is on the next leg. And so if this current leg is going to be 3 to 4 boxes, I can profit from it with 8 trades. And as such, now that's set up, that's set aside, that's its own little thing. And if I'm moving off of the lows, I can start spending 1% per box and make cash flow along the way, right? So not only am I making 3 pips, 3 pips, 3 pips in the right direction with the wind blowing in my sails, but as the wind is blowing my ship to port, it's also, making me bigger winners, fatter winners. Here's an entry, right? Boom. And I have 3 more for that current box, right? And I'm leaving the swing trades alone. Pretend they don't exist anymore, right? Now we're just focusing on the 3 pips, 3 pips, 3 pips. Right? So we're going to create a bit of a cash flow while creating draw up, or up draw, which would be the right term. Right? So we want to be trading with house money. And that's kind of what we're setting up, right? As long as we stay above that white dotted line, we're using house money to trade, right? Or that might be over exaggerated. As long as we're staying above the white line, we're in profit. And so instead of trading in drawdown, you're trading in up draw. Right. So there's a second click. I was buying the wick right there. There's a third. Right. And I'm looking for a move towards the top of the box. This here. So I'll just remove this. I'll remove this and that. 20 minutes or so. Our currently open trades should close, these ones, and our swing trades should be on our way. Right? It's because of this bullish outcome that I have in mind, and the fact that we've tested the outer edge of this outside range. I'm thinking we're going to go and maybe, go a little further. And it's going into the main event on the calendar, right? The euro, I think, is trying to go up. before the main event. Okay, so I'm just thinking out loud, and we'll see what happens. We have to trade the facts. Sometimes we end up stuck with our delusion. We end up thinking we can't be wrong because we put so much time and effort in doing our due diligence, our top-down analysis. Everything lines up in one direction, and yet the market is proving you otherwise. Follow the market, right? Don't try and convince the market you are right. It's an endeavor you'll never win. So here we are. Slowly but surely, a red candle would be an opportunity to buy right there. Boom. All right, I'm above my break even. Therefore, I'm in updraw. I couldn't believe it this morning. I got out of bed, looked out the window, and it's raining in January in the Rocky Mountains. And so I looked at the thermometer and it's +8 Celsius. It's like, oh my God, what is happening? Everything is weird. It, it's supposed to be the deep freeze. Welcome to the new order of things. Man, oh man. I'm just going to content myself with trading the Euro USD and not look out the window. It's too scary out there. Right. 17 minutes. So those of us that were trading yesterday, this is what we did as a group. And when we left as a group, we had an idea that the market would go higher, and sure enough, it did. And so those of you that were buying for swing trade down at the bottom, as we suggested, you would have profited handsomely, in the course of the day. And that's similarly what I'm trying to repeat here, right? We exercised a pullback. I bought the pullback. I'm creating a bunch of swings for myself, and I'm thinking that these swings might last a few hours before I get the opportunity to close them. Much like I suggested you do back here, right? So wash, rinse, and repeat. Oh, here we are closing our winners, and we're just left with our swing trades and updraw of $10 or so. And we did it all in 45 minutes. Okay, so well, let's keep trading for another 15 minutes or so, and then we can stop the recording. Pull back, red candle, buy. Boom. Right. So happens the target is in the box. And that makes it a high probability activity. Right. A red retracement on this move here, I'll buy more. Right. I'm not touching the swings. They themselves have their own stop loss, and therefore I'm trying to create a one-to-one environment. And inside of that one-to-one, I'm trading for 3 pips, which is clearly upside down. Risk to reward. All right, red candle, buy. Now I have two. I'm allowed two more. One. If it pushes a little bit lower right there, I spent the money that belongs in that box. Right. So ideally, I'm thinking it continues to move in my favor, and I'm allowing myself to, sweat a little bit of heat in my kitchen. And that's okay. This is what we are trained to do, right? We're trained to operate under duress, right? We take the best trades when everybody else is freaking out. Right? If you have the money to spend, click it right there. You're at support, right? Beautiful. Slow and steady growth, it's almost required. If you overextend yourself beyond your skis, you'll blow up the account every time. So what we backed off, micro lots, and we're spreading micro lots over time, right? So we're covering ground, and it's this average work that pays us an average income. It's all, I'm never really looking at one big fat trade to pay my bills, right? It's all about milking the cow instead of putting the barn up for sale. Right. So if you can afford it, buy right here. I'll take a buy right there. Right. And then we're looking at time of day, right? Coming up in about 12 minutes or so should be the UK fix. With that, we expect volatility, we expect incoming flows, and considering time of day, uh, month end, we are reminded that there's bigger players out there that probably have a job to do. And if they're thinking of moving their money because they're running out of time, you don't want to fight it, right? We don't stand in the way of anything. We don't trade size, right? We mean nothing in this market. And so we're just here riding coattails, cleaning up the crumbs between the teeth of the alligator. We're pretty good at it. We recycle really good. Yes, there we are. That's it. That's it. Pull back, give me a trade. Boom, just like so. Right. So I lost track of how many trades we did as a group, but again, I think we were successful. Most of you that, waited for the session to start in order to begin trading, you would have started at about 50 minutes ago or 8 o'clock my time, 10 o'clock Eastern. We've been playing the bullish side and you've profited on every trade, right? In the next 10 minutes or so, I'll have to let you guys go, but I would recommend you don't touch your stop losses, keep your open trades open And if you do have swing trades, take heed that somewhere around the 860 to 875 mark, you might be wanting to take them off. Right? So just putting that out there. You have a plan of action going forward. Right? You don't want to be left stranded. Tomorrow we'll do the same thing again. All right. We'll come in, we'll get ready to trade the news reaction, not the actual news event. So if you can afford it, take a trade. Come on. This is the toughest part of the whole process, the waiting. So this is when your brain will run rampant with whatever crosses it. Right. Opportunity to buy if you can afford it. And look at where you are in the box. Okay, we're approaching the bottom of the box. We would expect support here, right? That's what we do from the low, right? That's just the amount of space we give ourselves. It's a mathematical average, right? It's the standard deviation. The word standard is what we're looking to exploit, right? So if this is a standard move, it makes sense that we bounce off of here for another standard move. And according to that, we should bounce one more time, right? So I'm expecting multiple pushes up. We're trying to figure out where they start from. Right? This is the key. Or is it going to start from around here? Right? I'll take a trade. We're trying to find where the bounce, where support is, or resistance, whichever case you might be trading. It's an assumption, and therefore we take these assumptions lightly, and we do it cheap, micro lots. And you're willing to repeat those assumptions until you're proven right, right? But there's a limit. It's not unlimited money. It's not unlimited clicks. It's not unlimited boxes. We put parameters around all that stuff. Here's click number 60. There you go. All right. So I had 8 swing trades. And so now I just open with my 8 swing trades, 8 more clicks. So in total, I have 4 up top, 4 down here. And I'm waiting to see if it will bounce up from here. Okay, so ultimately we're looking for a move up, and I'm looking to close my swing trades somewhere closer to the 900 level. And here's that 900 level. By the time I get here, I absolutely want to sell. Okay. Let's see. I'm just waiting to see a push up so I can close these trades, and then as the group is concerned, we'll be finished with, our hour of group trading. There. All right, so you'll notice where break even is within literally spitting distance. It's not that far away. It's not that difficult to get there. We're looking at an average move. We're just trying to figure out when will that take place. Time of day may have something to do with it. Maybe it's a catalyst, like a news event, right? It could be the UK fix. It could be the banker's close. It could be anything that propels this thing, the 4 boxes that we're looking for. All right, so now I have to stop clicking. I'm 2 over. So now we're waiting patiently and see which way we're gonna get paid next. Right? We built a position to make money on the upside, and that's provided time before the main event on the calendar. Right? So there could still be opportunities to buy even cheaper. And this is why we spread that risk. We don't put it all at once. We don't try to throw a perfect dart. We know we're in the right neighborhood being 3 to 4 boxes. And I know that in that neighborhood, I want to be buying for an ultimate goal that's higher than here. Right? So it's this positioning that has to take place, this spreading of the risk, building a position, postponing gratification. Right? It's all happening here because this is what I expect is next. Right? And we get paid on what's next, not on what's happening right here, right now. What's happening right here, right now is what everybody else is chasing. Mr. Market may have heard me. Feels good. 5 more minutes and I'll have to let you go, but we do have a plan of action. And if we're wrong, we also have consequences. Right? So it's a balance and the probabilities are favorable to us. So we took the trade. Right? We are trading probabilities, not prayers or luck. Good way to end the month. I think tomorrow we have, the 31st, one more session, and then we'll be finished with January. Can't beat it. A couple more minutes. I'm just waiting to see if I can reopen these two here. Maybe I will actually right now. There we go. Okay, so this is it, ladies and gents. We're going to call it a day. I'm leaving you with a plan of action, right? Don't touch anything. Just let your winners run. If you do have swing trades, close them closer to 860, between 860 and 900. If you're shorting the market, well, I wish you luck. Okay, and I'll see you guys tomorrow. Bye-bye. Actually, let's take a picture of this before it's too late. All right, thanks everyone.